Well, good morning. It looks like last couple videos or live streams that I put up, the audio was off. That's my bad. Anyways, um, yeah, we've had a pretty slow week here. Got some coming into the end of the quarter. This is where you see a lot of the portfolio managers kind of redoing and readjusting their portfolios, based on movements in the market. So, you do see a slowdown, whether you see pullbacks or whatever in the overall market. You can't look at that. What you need to be concentrating on is, what your strategy is and the portfolio that you have. Don't worry about what everybody else is doing. But anyways, let's start off and take a look. We'll just go down through. This is Mosaic View in Interactive Broker. You won't need something this advanced. I mean, you can do a lot with this platform. You can get into E-Trade. What's the other ones that are out there? I have E-Trade, TD Ameritrade, Merrill Lynch. They're all offering zero fees on commissions for equities. That means stocks and ETFs. Don't get that confused with options. We're not options traders here. We can do that, but that's not the gist of what we're showing here. So as you look down through, we'll start off with this portfolio in Mosaic View. It's just a little easier way to jump through your stocks. I like the classic. We'll show you that a little later, where you can actually look and see what your position is a little bit more in depth. This just gives you a quick highlight to see where you're at in relationship to your sell limit. You can see, like in this example here, you see TLT. Is pretty far down, but because we have a managed portfolio that's based on risk, we don't like big risk. So what we do in all these portfolios, it's really based on the size of your accounts. So you don't want to be, in this particular case, what do we have, like four positions or 4 shares of stock. Okay. So that's been dollar cost averaged, and if our scan tells us, hey, we can buy more, we'll buy more because we're into another segment of this trading. So we're not ready to go into this yet. It wasn't on the scan this week, so we wait for it to come back up on the scan. Let's go down through here. These are just any dividend paying stock, CEFs. If you look at the bottom of this chart, you'll see quarterly. You can look at the date, 12/7, 3/8. That's 90 days approximately. So this is a quarterly pair. And you see it every month, monthly pair. So each one of these dividends represents an occurrence. And that's what we're after. We want to see occurrences, as well as trades. So we'll go more in depth with that. When the market's coming down, a lot of stocks do follow it, but there are plenty that don't follow it. So don't make the mistake of thinking that the overall market forces all stocks to move with it. It's not a magnet to everything. So we don't know where tops or bottoms are, and we don't care. We manage based on what a scan tells us, and then we use money management and risk to assess where we put in our next order based on the size of our portfolio. You got to keep that in mind. Anytime that you're making a decision, you don't want to make the mistake of over leveraging yourself in any one underlying. So it may seem like, well, it's one share. How can you make any money off that? Well, it's because we're trying to trade it multiple times during the year. We're trying to target the amount of the dividend for the year. So on the lead up here, what happened? Well, I had a couple questions from some people asking about, well, how come the dividends don't show up immediately? Well, it can go ex-dividend. Like today, we're going to have FITBI, FITBI, and GSBC, and INDB. They're all paying dividends today. But what actually happens is, as long as you're holding it today, you'll get paid that dividend amount based on the number of shares that you have times whatever. If it's a quarterly pair, let's say it's 35 cents a quarter, that's what you'll get. That money actually isn't deposited into your cash account immediately. Some of them have like a waiting period, like a payment date that they'll actually pay that. So where does that money go? Well, it goes into basically an accrual account. Each platform or each broker may call it something differently. That's where they actually just hold the money until that company pays it. They're basically letting you know. So if we looked in one or two of these accounts that we show online here, there can be an accrual of a couple hundred, maybe even $1,000 just sitting there waiting to get paid. Majority of your quarterly pairs, because this is the end of March, there should be some pretty substantial payments, because if it paid somewhere a couple weeks ago, maybe that payment date is coming in either Friday or sometime next week or early part of April. So you don't want to get caught up in that, trying to track that and try to time your trades to when you're getting paid. I mean, I know some people that do that, and some people have different, ideas on, and if it's going to pay me a dividend, I'm going to get it on this date. I said, well, that's fine as long as you stick to your plan, whatever your plan's going to be. We do things a little differently here. I'm not saying we've got the holy grail or anything, but we don't take losses, and that should be your main goal, because if you're not losing money, that's the number one rule. Don't lose money. That means don't make stupid decisions. Manage, and most people cannot manage money, so it's imperative that you learn it. Risk is your biggest thing that's going to, anytime that you want to, if you have a small amount of money, it can go away very quickly because you have that FOMO, fear of missing out. It's like, hey, I got $10,000, and what am I going to put it into? Well, you can't make a lot off $10,000. You can make 10% a year. You can do that. That's not impossible in the market. You add dividends plus your trading, and it can go anywhere from 10 to 20%, maybe even higher if you get lucky on something. But we don't bank on luck. We try to manage the portfolio best way we can. But it's important not to get over leveraged in any one. You see, we have multiple stocks that pay dividends here, right? And we don't look at any particular, I don't endorse any particular company. All I know is that what we do, if a company is paying dividends, that's enough. Because what it means is the company has the ability, or they're making enough money to pay out to their shareholders dividends. Now, each person is different. The person with $10,000 versus the person with $10 million, they have to manage their money according to the size of their account. So the same rules apply. It's kind of like instituting a flat tax, let's say 5 or 10%, right? So everybody follows that same rule, no matter the size of your account. If you can figure that part of it out, then you can manage your portfolios better, because you're not subject to, you want to have diversification. And diversification comes, from risk assessment. Don't put too much money in any one company. I would rather have multiple, like thousands of companies paying me dividends, right? Because, hey, you're going to have one that either stops paying dividends, runs into some type of, lawsuit or whatever, But the companies that are constantly, like Coke's not going anywhere, you name it, just name any company that's been around for 100 years, their dividends keep increasing. But a lot of people keep chasing that dream like, hey, I've heard about these stock splits. And it's like, well, hey, if it happens, great. But, the company's going down the tubes. I'd rather have a couple shares than a couple hundred shares because I can't get at, right? You're going to take a loss. That's the whole idea. If you're going to take a loss and it's some company you really don't, understand, you can do a lot of research and there's thousands of companies. Which one's the best? Like at any one point in time, one can be better than the other. So it's a constant barrage. We like to simplify it and say, okay, listen, if a company's making money, that's the bottom line. That's like if you go to work for one of these companies, they want you to be able to come up with a product that's going to make them money. They don't care about all those little bells and whistles and everything they talk about, within their company or who's running the company or whatever. If it's paying a dividend, that means they're making money. Bottom line. If you get, if you're trying to guess where this company's going, growth companies, they don't pay dividends. We're not interested in that, right? Because you can benefit on the move, right? But you don't know what's going to happen. Nobody does. We can be wrong where we bought, if you call it wrong, but we like to collect that dividend if we're being wrong, right? So just looking at this one's coming down, right? SWM, some type of Schweitzer something international, who knows what it is, but it pays a dividend, so we're interested. So it's coming down. We paid what, 47.81. It says 45. I don't care, right? If it comes back down in this, if you see in this window from where I bought it in this portfolio, you're going to see it come down to 37.26. That's our next time to buy. So if you look at scales on each stock that you're playing with, if you have a rule that, hey, I'm going to buy it at this time and at this time, and it has max shares, we don't know on this because I don't annotate it on this particular, so I know which stocks I'm working with. But like SWN, if you've got 3, maybe you have max shares of 30 because that looks like a first time trade. If it comes down to the 50, that'd be the second time trade. And then the third trade, you're looking at 26.70. Then you go back, it's got to come up on the scan. So it's a cycle. Like if it goes down even further, if it doesn't come up on the scan, we don't buy it. But we'll end up with 9 shares earning us that dividend of 176. So if this market was to crash tomorrow, every one of our charts will be 3 trades deep until something comes back up on the scan. Otherwise, we'll have dividends paying us, growing our cash account so that we can buy more in the future, because this is a wave. We're basically in the wave. I like to, we're not catching tops, we're not catching bottoms. That's not what it's about. We're not trying to be right. What we're trying to be is tactical. We want our money coming to us on a consistent basis. Every quarter we're getting paid on the quarterly pairs, and then your monthly, that should be you should have a good foundation of either CEFs or monthly pairs. There are stocks out there that are monthly pairs, but they're kind of hard to find. And they show up on our scans every once in a while, but all the conditions have to be met with our algorithm or else we don't touch them. So in this case, it doesn't tell us that this is a top. It doesn't tell us that this is a bottom. It tells us that the conditions are right to get into this particular stock. So you got to have some rules. So whatever rules you want to make up, that's what you stick with. If you want to follow our scans, if you're new to it, we give away a free scan for a month for anybody that wants to subscribe. Just click on it, and shoot us an email. We don't know who you are unless you send us an email to T1ReconRider@gmail. Then I can send you a scan that comes out on Sundays. You can take a look at it. It's after that, if you want to continue using it and check out how we actually trade this, it's all up to you what you want to pick on there. We don't tell you what to buy. It's just a list of stocks. You can look at it, and people that get the scan use it in several different ways. We can go over all that kind of stuff. Once the week is over, I'll probably put a video on it. But the whole idea behind this is to understand how to manage your trades. This isn't, get rich quick. This is, if you want to call it get rich steady. It's all based on following the rules and not getting in over your head on any one trade. But yeah, we've got about 15 minutes before they open, so we'll go down through a few more of these. Got some that are rising. See, I don't know where this is going. I have no idea. I just look at this to say, am I over my limit? That sell limit right here, 106.40. Let's say I look up there and that little yellow on the side here showing 103.82. That's a closing price from yesterday. You can look on here and see 103.82. And this is for the week. Okay, these are weekly bars, not daily bars. Don't get them confused. So let's say it was up here, 107.50. Well, we can cancel that order if we wanted to, and then put it in a trailing stop for the amount of the difference from that 104.60. Let's just say it was 105.90. Then we could trail stop, and then if it continued up, because we don't know. Or you could just take the profit. There's several. This is where you have the flexibility. It's up to you what you want to do. But the whole idea, that's the minimum amount we're going to take is 106.40. That's what we're selling it for. If you look at stocks as kind of like a can of beans or something, it's like, okay, I got 2 cans of beans for sale here with PLD, and I'm selling them for $106.40 each. If you want them, you'll pay it, right? If not, I collect dividends off of it. I don't care how long we hold it for. It could sit in that account for the next 10 years. As long as the company is making money. If you look here, it's moved from 58 cents a quarter to 63, and everybody's like, well, can you make any money off of that? You have to think occurrences, and you have to think scale. You have to think numbers. Instead, you could take all your money, right? In this particular account, there's about $70,000. You could just buy PLD, right, and just collect a whatever 70,000 would get you at, what is it? See, 70,000 divided by 103.82. Oh, 103.82. So you could buy, that's not right. 70,000 divided by 103.82. By 674 shares, multiply that by what's it paying per year in dividends, 252. So you make $1,700 a year. So 1,700 divided by 70,000, multiply that by 100. It's 2.4%. That's better than a bank, right? You have that option to do that. You don't even have to. You just open up an account, just sit on it, say, yeah, I got $70,000. I want to, earn 2.5% basically. There's another way you can make more. But if you, in this particular case, see, we have 2 shares, right? That's what, $200 invested. You're still making that same percentage, 2.4%. That doesn't change, right? Because the dividend amount divided by the stock price is how you get your dividend yield. People get mixed up with it. If the price is going up and the dividend stays the same, your yield comes down, and vice versa. If the price is going down and the dividend stays the same, your dividend yield goes up. So keep that in mind. But now what we do is stocks are always moving at different paces, And when I say paces, it's how fast, like let's say it moves up $1 and you might have another one that does $10. So if you're only in this one, maybe it's just saying flat, and you're just like, okay, well, when am I going to take profits? Well, I'm not going to. I'm just going to sit on it and earn that $1,700 a year. And there's nothing wrong with that. But you know how long it takes to, double your money at 2.5%? A long time, at least 20 years. So in 20 years, if you didn't add any money to your portfolio, that 70,000 would be 140 in 20 years, approximately. It just depends on how the dividends are paid. So I want to be in more. I want the ability to sell that 70. Let's just say we bought 70 or 674 shares here, $70,000, and we wanted to target that $1,700, right, at 106.40. That's when it would happen. Okay, but what's the risk? You got $70,000. We don't know that it's going to hit that 106.40. We have no idea. You're looking at this price and you say, well, that sounds like a good idea to make $1,700 in a couple of days. The risk is this goes against you, right? So you're stuck earning the 2.5%. You didn't get that $1,700. You don't know where it's going. You might think by looking at this chart, you know where it's going, but I'm telling you, if you buy in to this way of thinking, that you know where this price is going, if you honestly believe that that's going from 103.82 on the open today and it's going to hit 106.40 today, you're fooling yourself. I have no idea if it's going to go there or not. None. Get it out of your head. The charts lie to you. Just because you see this, right? It went down, it went up. It went down, it's got to go up, right? No. I've seen it over and over and over, and people get trapped. So what do? Well, let's just say it never goes higher than 103.82, and you got 70 grand in there, and all of a sudden something happens in the company, and this stock price goes from 103.82 down to 50. You're down to $35,000. It's not that you've lost it. It's an unrealized loss. But what do people do? They panic, right? You're still making that 2.5%, hopefully. The dividends are still being paid. Whatever happened in the company went down. The stock price went down for whatever reason. It's just hypothetical. But you're still making that 2.5%. But you can't, you can sell it and take a $35,000 loss. But what's the rule? The rule is you don't take losses. So how do you not get hurt if that happens? So you're looking at every possibility. I'm assuming that this can go to $50. So we only buy a few shares of everything because it can happen to any stock, right? It could also double in price, but that's not what we're after. We're after occurrences. We're trying to buy and sell as many times and get the full year's dividends with small amounts. Just think of each stock as a mini piggy bank, and you add them all up at the end of the year. If you've got thousands of stocks all earning, $10 in trades and another $10 in dividends each, multiply that by 1,000, you got $20,000. Small accounts, you can work them. You just have to understand what you're doing and don't get caught up in the hype. Don't get FOMO, and no YOLO plays. A YOLO play is like, hey, I know where this is going, so I'm just going to take that $200,000, stick it in there, and buy as much shares as I can, and it never goes up. It happens every day, and then people start telling you about putting stops in there. You got a 50-50 chance every time you make a trade. What's your odds on a lottery ticket? 1 in 750 million. I'll take the 50-50 every day. I'll flip a coin. You got 50-50 chance on every single stock that you buy. 50-50. It either goes up and it goes down. I guess you could say it could just stay flat on the weekends, because it doesn't move, but that's not reality. So, where are we at? PLD, let's find it on here. We got about 6 minutes before the open. For me jabbering along here. Is that going up? When you look at that, all you should be looking for is, hey, am I taking profit today or not? You have no idea if that's going up. I don't know that that's going down. I don't know if it's going up. I don't know if it's staying the same. All I do know is that it's paying me dividends. That's all I care about. BTZ, ARE. Now that when you see that green shaded area, that just means I'm above water. If you see that green area, you're below water. And if the stock price is below it. Now, why don't you take profit? Well, because my target's up here. That's a full year's worth of dividends I'm after. I'm not after a half year's or whatever. And I don't care what the market does. If you start listening to that, oh, I got to sell it. I mean, you sell everything, you missed out on 50% of your profit. You'll never, say, well, I'm trying to protect my, if you never sell for a loss, the money never goes anywhere. You got to understand the difference. Look up unrealized and realized gains. It works for losses too. If you never sell anything and you just sit on it, you never realize any gains. And a lot of people's portfolios are going to hurt because they never take profit. They're afraid of paying that tax. Hey, if you're making money, pay your tax. If at the end of the year you need to, talk to your tax attorney. I'm not a tax attorney. I know how to manage my money. You need to learn how to manage yours. And you can do this on this side. If you need financial advice, talk to your CPA or talk to a financial advisor. But for managing money, if you don't understand how to manage money, you need to learn it and just watch some of this and learn. It's not rocket science. Anybody can do this. It's just, you got to get it out of your head. You know where it's going. And that's what everybody is, a 50-50 chance. Yes, we need to put in some Fibonacci lines there. But they're not Fibonacci. This is just a tool. I don't believe in the Fibonacci stuff. A lot of people do. That's fine. Use whatever works for your strategy. You can follow this and figure out if it works or not for you. If it's of interest to you, then just contact me, ask some questions. Don't be afraid to ask questions. They're not stupid questions if you've never done this before. Don't sit there and watch somebody you've never heard of or seen before and think that I know everything. Don't fall into that trap. Question everything. If you see it happen, then all of a sudden trade it. Every one of these platforms, if you don't have a brokerage account, it's free to trade, right? So you can also use a paper trading account. You shouldn't use it very long once you actually understand how your platform works. It's been, 25 plus years that I've been trading and investing. So I work quite a few accounts. But you'll understand your platform and you can zip around on it. And when this opens, whether we have a lot of alerts going off or whether we have buys or sell, this could just be a dead week. I mean, some weeks are busier than others, but these three accounts that I show, I'm going to get on here for an hour because I have other accounts that I have to deal with. And I just don't have enough time. I can't put my full day out. But you'll see everything is in a different state, right, in relation to the above water or below water. So you down money? I'm not down any money yet, right, because I hadn't taken a loss. It's unrealized. It's unrealized gains, unrealized losses. So I don't take realized losses. I stay in the trade. I stay and I own the stuff. I want to be an owner. It's just like owning real estate. But these, you always have a tenant. You never have to worry about finding a tenant because it's always available. You just don't want you know, all your money in one home. You'd want to have, if you could buy 1,000 different homes and have money coming in each month from rent, wouldn't that be better than just buying one? You know, what happens if the tenant moves out? Now you got to find another. You're not getting any dividends or rent. I'm basically renting out stocks is what I'm doing. Look at it that way. Any way that gets your head around the stupid shit, you know, this get rich quick scheme. Hey, I'm sure there's some people that fucking hit the jackpot on the stock market. But let me tell you, there's more people losing than there are people winning. How you going to win is investing your money. Okay. I'll write all these down and look at them later. Twice. Okay. So we sold ES, so we'll take a look at that one first. We'll see how much. It'll be a small amount, but which account was that on? Let's get out of this so we can look at the trade log. It wasn't that one. So we'll go over here to this one. And there it sits ES, right? We look at the timestamp. So 8:30, 11 seconds after it opened, we bought RGR. Okay, so we'll look at that one first. And we sold ES at 14.66 profit, right? See if anything else happened that we missed. And okay, and we bought ACV. Right? So we go in and we look at each individual one. We pop up the, let's see what account, ACV and RGR. So RGR, we look at the chart, right? And you don't even have to use a chart for this. If you're using like E-Trade or something, all you have to know is what's your profit target, right? If you bought it, you got to have a profit target. But see, this is, we DCA'd this, right? It came down to our 50% level, so we can get rid of that line, right? If you understand that, you can see where we bought it there, and we bought it here. Our next buy is down here at 58.70. So we're just going to put a buy order in down here because we know that our max shares are 17. So we know we can buy 2. What we're doing is we're anticipating it. Doesn't mean it's coming down here, but if you don't have an order in, how are you going to know, right? So you have to have enough money by not buying, you know, 100 shares up here. It's not that we were wrong, but we're getting dividends. So we want to limit at 58.70, right? So we change this order here to 58.70. So this, if it comes down and hits this, now we're back to the scan. This could be on the scan this week. I hadn't checked, but I can't use the scan to buy because the numbers or the strategy doesn't allow us to do that. Okay, so we're gonna buy that. If it comes down, limit just stays in there for, I don't know, 45 or 60 days. So we're gonna remove that Fibonacci line because that's just a I hate using the word Fibonacci. I mean, just it kind of, I don't know, it gets under my skin. But anyways, so now we go back into the order because this is going to change the sell limit, okay? Because you dollar cost averaged it. What's going to end up happening is we had a 50% pullback from the top of where we bought it, right? Because it did look different than this. But let's look. Let's go to, got to keep up with this and trade at the same time. These are just alerts. We're in no rush. You take your time. We come back down to RJR. So now we need to change our price here, right? It's based on the dividend amount that we're targeting. So 67, we're just going to make it 67.30, right? That's our average cost. and then we're going to add, right, $1.46, and now we have 4 shares, but because I have to pay $1 in commission, we have to add 25 cents, because 4 into $1, okay, $1 divided by 4 is 25 cents, so we add 25 cents, right? So 69.01, I like to add a couple pennies to get it up to cover any regulatory fees, so 69.05. So we already have a sell limit in here, right? We look at it here. It used to be 71.90, so now we're moving it to 69.05. We're still targeting that same amount. We're just doubling the amount of our profit if that happens. Right? So now you look at it. Now you see our average cost used to be $69.91, but now our target price is actually below our original cost. So this could come up and hit it, or it could come down and hit this. This is the 50-50. You're right in the middle, right? 50-50 chance of going any direction. If you can do this thousands of times per year, you'll make money. So 4 times, what, $1, what is it? $1.50, so that's $6. That's how much you're going to make on this. That all you had to do was follow a plan. Now multiply this by thousands of trades. If you could do that 1,000 times in a trading year, you'll make $6,000. Right? On what size account is this? 6,000 on 20. Look at how many different positions we're playing with here. They all have an opportunity. So if we have 100, we only have to turn this over 10 times. If we can't do that, what's happening in the background? We're getting paid dividends. See, market's down overall today, right? And you look positive here, positive here, positive down here, flat here, positive here, positive here. So the overall market doesn't tell you the whole story. Okay, so we took care of RJR. Let's go to ACV. I think that's on this one. So is this a dollar cost average? And you'll be able to tell. It sure is. See how that dropped from the 100% to down here? So we hit that 50%. And we know that it's 5 shares because that's what we just bought. Now because this is like a $5, I'm going to put an alert in here so I don't use up capital. Because anytime that you put an order in, it subtracts from your cash account. Not that it's going anywhere. It just doesn't allow you to overspend in your account unless you're on margin, but you have to set up your accounts correctly. So we're going to do the exact same thing. So we had a 50% pullback from that price, came down here and hit. So it was here. That was our average cost. We kind of caught it right there at the top. Notice this is a monthly dividend pair. So a lot of people would freak out and be, oh, I'm going to sell if it comes down $1. You just lost, you know, if you had 100 shares, you lost $100. At 10, we're like, whatever. It does whatever we want it to do. So, okay, so we've got ACV, and so it's 2. So let's look at the calculator here. So we have 10 shares now, right? Oh, and I need to go back to RJR here real quick. I forgot to do something. Go back over here real quick before I forget. I had to change the amount that we were going to sell. See, notice it was 4. It's 4 now, but it was 2. But we want to sell the entire position when it comes there. Almost forgot that. Sometimes you get caught up and forget things. Done this so many times. If I had it automated, it'd be nice, but you wouldn't have that fun of feeling the market out either. So okay, let's go up here and reset our target price because we know it's 33.04 is our average cost right now. 33.04 plus $2, right? And we have 10 shares, so we got to add 10 cents because 10 divided into $1. So 35, and we'll go 15. So we know at 35.15, notice the target price was 38.10. Okay, that's the dollar cost average, the 35.15. So now you don't have to add those couple pennies based on how many shares you have if you have an account other than Interactive Brokers. This is like their pro platform that I've used for over 25 years. I'm going to add that extra 5 to sell, right? Because we're targeting $2 for the full year, right? So 10 multiplied by 2 is $20. You start looking at how much you can make each time this happens. Like, this market can come down, I don't care. Doesn't matter, because what just happened, I'm getting 10 times, like I can make $20 this year. Oh, in a year's time now, from this point forward, it's 6.7% on that small amount of money, $330. I have a mini bank account in each one of these. That's just another way of looking at it. But we got about 20 minutes, so I'll speed it up a little bit here. Got a lot of stuff to do before, and I will be closed tomorrow. I will not be going live tomorrow. I'm heading back home. I'm out of state. Just taking care of some business. So we got that covered. Let's take a look at ES. That one sold. We'll take a look at the chart. We'll reset everything, right? So you can see, I can't remember when this was bought. I'm assuming it was somewhere down here. We can probably look and see. Maybe it was buy this week. It was probably last week. Doesn't really matter. But the whole idea is we want to reset everything so we don't make any mistakes. Well, there's nothing on the chart to worry about. Well, let's take a look over here. Yeah, so it was sold in that particular account. So let's see. I can save this. Dang it. Put this up on. I don't know which one that was. Doesn't matter. I missed it. Let me take a picture of this one. Chart image. I'm going to send that over to Twitter. Let everybody know who's following on Twitter. Get that done real quick. What was the percentage gain on that puppy? 2.8. Tweak that, and we'll put the 2 in that we sold and just bought, and then long RJR and ACB. All right, so let's get back after it. So we got that covered. Kind of a slow morning, which is fine. I like that. So ACV, we already taken care of that. That was just on a alert. THO. Let's see if that's on the scan. Yes, it is. So maybe a buying opportunity. Let's look on the chart. There it is. So THO. Notice I'm not paying attention to anything else. I'm focusing on my alerts. I'm looking at the scan. Oh, this is perfect. Like, see, I like stuff like this, right? Because we're getting a deal on this. And it's outside of our max shares. We can't do it. It's just under, well, it's max shares is 9, and with a 10% that doesn't allow us in that one. It's too bad, but it's just a little too expensive based on the algorithm to come up with like 0.9 of a share. And we don't do fractionals. I only do full shares. Now, some of your platforms will screw you up as far as buying and selling. So you always want to build in a little bit of cushion. So you know, and always set your trades for all or none. Don't let them get you on those fractional shares. That will mess with your head. It's a little harder to do accounting, but you know, overall, I would just stick to round shares. I do not like fractional. Because people, they started doing that with Bitcoin. It's fractional, you know. You can buy like 0.0001 shares of Bitcoin because it's so expensive. But they started doing it with $5 stocks. It's like, the hell? I don't want, you know, 10 cents worth of something. I want a full share. It's just easier to compute stuff in your head. Okay, so throws out of the question. Now, if you had over 100,000 in your account, now you just go to the 20% of max shares. Even if you have $1 million in your account, your max shares is the max amount. You get up into 2 million, then we go to a different algorithm. All right, is Lamar on the list? No, it is not. So it wasn't, it's just an old alert. Get that off of there. See if Yum is on. Let's check it out. Yum brands are like, I can't remember, is it Taco Bell and KFC, I think, something like that. Let's see, and we can, and this is, let's put our max shares on here so everybody can see it. 18, right? And max shares change. They can change from week to week. They can change from month to month. It just, you have to pay attention to the max shares. This is your risk, right? That's the most amount that you can own of Yum. You know, even if you have $1 million, because the algorithm has shown it protects our money. We never have too much money in any one particular stock. All right, so we're doing 2. What was the 106.18? All right, so we're going to buy. Discard 2. And we're going to trail this. See if we can get some price improvement here. Now, our scan is telling us, what's the amount? $2. So we're going to go $1.80 minus, see, it sucker's moving a lot. 106.18. Hey, what are you doing? My pup's found some money. Takes after his dad. He's chasing pennies. Hey, don't do that. I don't know where you find that stuff. Good boy. It wasn't a penny, it was a dime. Good boy. Oh yeah. He's a little 14-week-old Australian husky. Yeah. Good boy. Hey, he's bored. He misses his other buddy, Sally. What are you doing, man? All right, so where are we at here? 180, and we're going to go 6. What's the bottom price here? I get really crazy on this just to have fun with it. So 106.01. 26. Perfect. If you want to know what I did there, you need to ask a question. It's kind of crazy how I think, but it works for me. Anyways, let's see, we got about 11 minutes left, and we'll just take a good look at the overall market. It's got a bunch of questions on, I'll take care of those later. Okay, so we got a few GTCs that are going to, they call them aging, so we'll have to go in and redo those. It's just they've been in the system too long, and it's just something that they do at Interactive Broker. Well, actually all platforms do it, so we leave those up. We'll take care of those later today or tomorrow or whenever. This means they've been in the account long enough that they need to be changed, and that's fine. They'll show up. If you have a good enough platform or a broker, they'll let you know. I think with E-Trade, I think I can put the specific date in. You can do that with Interactive Broker, but when you're working with so many stocks and so many portfolios, it's just easier to let them age and then go back in there and reassign the GTC, good till cancel order, and just let it float around. But you can see a lot of stuff coming down, a little bit of profit taking, if you want to call it that. Let's go over to Mosaic. A little easier to see what the market's doing overall. I remember this is weekly bars. It's not daily, so what it does, it puts you in a little better frame of mind, because it's kind of a more bird's eye view of all your positions, so you're not freaking out because something moved. So these are a lot of things. If you don't see lines on there, it means they're underwater, which is fine. They're still paying dividends. You can see the positions have pretty good size share amounts. It's because there's a direct correlation to its volatility. Right, so they're just dividend collectors is all they are. So really we only have in this account, it looks like 7, 8, 9. There's probably, I don't know, in this particular count, if you see in the high hundreds or something. Let me go back up here. So I want to look at that. Yeah. So they're coming down, but at the same time, these are dividend payers, and we love them because they're high percentages. It doesn't take a ton of money. It looks like there's about, I don't know, $7, $11, $13, $15,000 earning a 10%. So it's an easy $1,500 to do nothing. See that one, Med? I think that's Medline. Is that right? Oh, Medifast. I get those two mixed up. Medline. It's like a medical supply company. I'm not really sure what Medfast is. It's expensive. I know that. We only have, what, one share? Yeah. So we don't care what it does. We're fixing to buy. We have a buy order in there at 207.21, right? DCA in it. Right? So we only have to go halfway back up to make our profit. For the same profit that we targeted up at 280. I don't know if that's making any sense to anybody, but it sure rings true for me. So that's what we're looking to do. And these all move at different rates, so you never know. GIS, that's General Mills. BSTZ, looks like that's another CEF. Come on down. hit it. We'll take it. Just do some readjustment. This is how you manage your portfolios. You start getting into larger amounts. If you can, it's just a matter of scale. If you can manage something at 10% of max shares and understand this concept, then when you get into bigger money, you'll never lose money. You'll understand what to do. But too many people want to leverage money. In my opinion, you shouldn't put any money into the market and do no investing until you get debt free. Debt free, I don't really include homes, but if you can knock that thing down to where you've got 2 or 3 years left on it, then no big deal, right? You're paying mostly equity, but you don't want to be throwing money into the market that you can lose when you can be paying down debt. Debt is, you don't want to be in a debt trap. I've been debt free for I don't know how many years now. Anyway, I'm debt free, so it's easier. You'll understand this better. You don't have to make that big money that, you know, it's like, well, I owe $500 a month. I need to make at least $1,000 a month just to have a gain. But you still have to pay taxes on this, so you got to take that into consideration as well. So you got one moving up out of that. A lot of red on the screen, but that's not the whole portfolio. See, we're still going down through. We're just looking to see. And it's funny how the CEFs are all looking like they're, you know, moving in sync, which is interesting. Most of your CEFs are run, well, most of your investing, make no mistake, you buying one share, you have no effect on the direction of the stock. If you buy 10 shares, it makes no difference. You buy 1,000 shares, it doesn't matter. The people that move the market is the big buddy, you know. Don't think you're trading with the big boys. Yep. Nothing special going on today. Just these type of weeks, this is just, you know, if you're not taking any losses, you're just floating along. I think, where are we at here? Let's take a look. Oh, that's a scan. We don't want to look at the scan. We want to look at the, yeah. Okay, so this is up to date. Today's the 25th. We're not being paid any dividends. So we have, let's see, 1, 2, 3, 4 days since the 25th of February where we didn't bring in some kind of dividend. And you can just check that in your account. I do it on a day-to-day basis just to show you the power. So we're outpacing the dividends that are coming in. Now, this is a combination of all 3 accounts that we show. So I don't, you know, I want to be as transparent as possible here. So all 3 accounts, you just divide them up, whatever. So they're averaging about 400 per account. Obviously, the bigger account brings in more, but we're just looking at an overall amount. So we already have a trade in there, right? Or we could add that in there, 1466, but we have a full day to go, right? So you can continue to add it. You know, if you understand how to use these type of things in Excel. So you can see this went up. Your dividend accumulation is not changing in 3 days, right? Because, well, for 2 days, it stayed the same because you didn't take in any dividends, but your profit went up by $14. Doesn't seem like a lot, but look at this. Every day it goes up. There's no losses. This is what you're trying to do. All right? So you can extend any of this stuff if you understand how to work all of this. Just helps you see where your accounts are going. You don't have to get all crazy with this stuff, but you know, that's $1,300. Now you can average that, right? Let's just say the market's going down, so we're not taking any profits. Zero. We don't make any profits at all. All you have to do is look at this dividend line, this brown line. Look where it's going. Up, right? So if this is positive every month, it can only mean that your account is growing. If you're trading, right, on top of that, you're hitting those dividend amounts. And look at that. Well, you can't make any money that way. You don't have enough shares of anything. It's like, I don't know. I mean, you tell me, right? So these are small accounts. Majority of the people that are going to come across this, you're going to have a small account. You need to understand how to manage these small accounts. If you can understand that, I promise you'll do a lot better than most people that are just throwing money at the market and hoping something sticks. But let's see, we're at PRK. Let's keep on going, see if there's any positives out there. Everybody wants that. Well, how come there's no bells and whistles going off? And why aren't you like trading like a fiend? And I was like, why? Because I have money coming in constantly. Right? Oh, IDC. Now that should have bought. Did I have an order in there? Should have. Let's take a look. Or did that buy yesterday? I think that bought yesterday. Let's go back over to Classic. IDCC. There it is. We got 4. Oh yeah, we already did that. Need to change that. Okay. Luckily I came across that. It was an alert. We changed that back, so we got, that was yesterday. Yeah, so we can get rid of this. Remove that Fibonacci line. It's the same thing that we did today. And did I change? Let me make sure. Now, I always like to double check because I want to make sure that I'm targeting the profit. 64.71. Let's go 72 plus 140 plus 25. So 66.40. Oh, see, we almost missed that. That's why you manage your account. 66.50. Let's double check it. 66.40. Okay, 4 shares. That's the entire, because we want to close the entire position at for 4 multiplied by $1.40. So now when we go look at that chart, you see where we're at. We should be below, right? It doesn't always happen, but if you have a pretty wide spread, then now what we're going to do is we're going to put an alert down here just to give us a heads up if it comes down there. We're not going to put an order in because it's so far away. It's like $6 and it doesn't move that much per week. Just an easier way to look at it. So let's go back to the mosaic where we ADCC. You can see some stuff is starting to recover a little bit. So they're going green. Occidental Petroleum. That's a warrant. That's kind of a lottery ticket. We just sit on that one. There's one going up. One going down. Going down. Going down. So it's not exciting. It's pretty boring. But if you sit here all day watching this, you're wasting your time. Okay? You put your orders in, put your alerts in, watch this after work, get a good idea. Once you sometimes this can take some people 6 months, maybe 3 months, maybe a month. Maybe you pick it up like immediately and you're just like gung ho and you figure it out. I'm going to put together an ebook, step by step, what you should do. I'll never tell you what to invest in. That's up to you. But I'll give you the money management skills that you can be successful. And that's what's important. And it'll translate, or you'll look at your life a little bit differently as far as debt. Debt is a trap. Don't fall into it. Those lines mean nothing on there. That 1970, that's some kind of extension off of Fibonacci, and we ain't worried about it. We don't follow Fibonacci. Okay, it's just some, let's get that off of there, matter of fact. I don't like that. Remove that Fibonacci line, remove that. Makes the chart look messy, doesn't it? I don't like messy charts. It's meaningless. None of those lines mean anything. This is just a tool, right? Just because it hit that line, we call them coincidence. But some people love to believe that those Fibonacci's mean something. Oh, yeah. Round it round. Where it goes, nobody knows. We run over a little bit today. That's fine. I just wanted to go through the rest of these on here and see what's going on. Since I won't be here tomorrow, I'll be in this afternoon for the close and then see what actually happened on the day. Other than that, yeah, not too much going on in the market. Let's just see what the overall is looking like. Yeah, I mean, it's flat on the ES. NASDAQ looks, you know, if you try to predict this market, you're a fool. I mean, you're just going to be chasing it. Who knows where this stuff's going? Don't care as long as I'm making them dividends. And that's the way you should think as well. As long as you're getting paid to hold it, that's all you should really worry about. But all right, that's it for today. I got to get out of here. I got a lot of stuff to do, and I'll try to get back on here this afternoon. No promises, but I should be. Anyhow, have a great day, and we'll talk to you later.